Hey guys, if you're interested in a trade, Dennis just put one on. It's at the 5 minute, 30-second mark. It's the kind of trade he would do in his hedge fund when we were running money together. If you're interested in an oil trade, I put one on several weeks ago that just now broke out. Good about the 12-minute.
Hey, Dennis, how's it going, man?
Good. Good to see you, Andy. How are you?
I'm doing well. It's good to see you. Let's get right into it. So we had a Fed decision to raise 0.25. That's somewhat, I would say, is somewhat expected, building up. Markets didn't really react too much. I would say that Powell was a little bit dovish in his comments, and the Fed is walking a tightrope of trying to raise, and it seems like they want equities or the broader market to sell off, but not too hard, so they can potentially lower, I don't know, maybe towards the end of the year or early next year. But I guess, what does this mean right now, and what what do you think being set up now going into the end of the year?
Well, yeah, it was widely expected that they would raise 25 basis points. The Fed funds futures basically guaranteed they were at 98%. So that was sort of a non-event. I wouldn't say he was too dovish. He was kind of in the middle. So they mentioned that, inflation is coming down, it's a good sign. And the economy is not really slowing down, which is also a great sign. So they're trying to generate the soft landing, the word that everybody uses. And so far they're being successful. As far as the stock market is concerned, the reaction was a little bit muted, but the next day was kind of like a reversal, sort of a sell-off for a little bit. And it was based on the fact that the 10-year went up quite a bit. So, the bonds sold off, interest rates went up for some reason. I think the market is just a little overbought. We've had a great run. Growth is still a little bit there. So we're not growing much, but we're not in a recession. So far, so good. A lot of things were technical because the market clearly went to the uptrend and the algos picked it up. And it was sort of predictable, and the market felt really good and actually keeps feeling pretty good. The Fed doesn't want the market to overheat, and they're correct. I believe that we might have a pullback. I'm not sure about full-blown correction. We can consolidate, we can pull back, but I don't see too many signs that all of a sudden everything stops, reverses, and starts going down, at least not yet. Maybe this fall we'll have some issues, problems, but overall it's still fine. Technically, it's still fine. Internally, it's still fine. And as we mentioned, fundamentally, it's still okay. We got VIX behaving in a normal manner. It reflects implied volatility of options reflects what the real volatility is. I think VIX at 15, I think that's where it closed on Friday. I think it's a little too high. We still have earnings reports coming up, not as many. August should be a quiet month. I think VIX will come down, and if we have a pullback, I believe it will be shallow. So
Got it.
That's my
So
thinking.
what are the technicals specifically? What are you telling you, and what exactly are you looking at right now going into August?
What I'm looking at is participation, what I call internals, how many stocks are going up instead of going down, breadth of the market, essentially, and all indicators around it. But the Dow joined, remember 2, 3, 4 months ago, was mostly about that magnificent seven, those seven Nasdaq stocks, but a lot of others joined, the energy stocks and industrials and a whole bunch of others. The Dow joined, and as I mentioned, it was a wonderful streak. The one thing that is still lagging is small caps. And I'll talk about a trade that I see. I think it's a lucrative trade. Even the banking sector and regional banks that were stuck in the mud because of the banking crisis back in March, even they are joining the rally. So, and it's still a little bit of a canary in the coal mine, because I look at indicators like credit card delinquencies and auto loans. There's some problems there, but we're not going to jump into it before it becomes a real problem. It's starting to become a problem. But overall, what I like is small caps right now. That's a chart of IWM, which is the best ETF for small caps. And the bottom over here, if you see the line jumping up and down, and you see the trend line connecting those two tops, and was trying to break out right now. And I think if it does break out, it's going to join the party of QQQ and the Dow and all that. So you can trade it by yourself, buy calls on IWM, or just buy it by itself. I'm going to stop sharing. Actually, I'll show a different chart. But what I see is whether the market is going to continue to go up or it's going to consolidate. I like market neutral trades, like being long one security versus being short another security.
Why do you like that?
It's basically, I think that IWM will outperform Nasdaq 100 as represented by QQQ, regardless whether the market's going to go up or down. So,
Okay, so let me interrupt you. So you would go long the small caps, and then you'd short QQQ.
exactly. So, and
Okay.
it doesn't mean that I bet that IWM will go up and QQQ will go down. That would be an ideal scenario. I doubt it's going to happen because they're highly correlated. But the bet is whether they both go up or down, IWM will do better on a relative basis. So in other words, let's say IWM goes up 10% over the next, 2-3 months, and QQQ will go up 4%. So you capture that 6% difference. The same thing on the downside. So I think IWM will be a better performer than QQQ, regardless of the direction. And
Is that just based on relative, like
Right.
it has to catch up?
Right. Basically a catch-up trade. I'll show you the trade. Let me change the securities here. So you got, if you see this chart, you got IWM on top and QQQ on the bottom. What you see, the blue line on the bottom is IWM divided by QQQ. So if the blue line goes down, it means IWM underperforming the QQQ on a relative basis.
I
I
see.
think that ratio is bottoming out at the moment. It says it's 0.51. I believe it's going to start going up, and that's the bet. So we're not trading just IWM, we're not trading just QQQ. We're trading this blue line right here. So we're kind of creating a new security. And how you do it and how hedge funds do it, they do it in a dollar neutral manner. So not a share neutral manner. Because if WM is trading in what price? See it right now. So I think the ratio is roughly 2-to-1.
Mhm.
So for every 2 shares you long IWM, you short 1 share of QQQ. So it's a dollar neutral matter. So the percentages will add up.
Got it.
That's the most interesting trade at the moment. If you just don't want to be, long stocks and short stocks, I think small caps will catch up. Kind of like the Dow did. Dow will caught up with QQQ and others over the last month. It just went
Right.
here because I was stuck in the mud for a while, and then it was time for industrials to go up. I think IWM is primed to do it based on valuations and based on a lot of things. Either it's going to catch up going on the upside, or it's going to hold well if the market corrects. So
So you're looking to put this trade on maybe in the next couple of days or in the next week or so?
I did it Friday on close. So It's not too,
It's already on.
it's not necessarily a perfect entry, but that's what I'm thinking. So I'll give this trade 2 or 3 months. I mean, if it works immediately, that's great. But I intend to capture a few percentage points. And then we'll see if something happens to regional banks again and they'll affect small caps, then it'll be time to get out of the
To
trade.
close it out. Got
Close
it.
it out. You can do it with options as well, but it gets a little bit complex. But for equity traders, I think it's something to think about.
So options, if you're trading options, would you go say maybe 2 months, 3 months out of the money, or what
I
would you
would
do?
do, something either towards the end of the year, between October and December, something like that.
Okay. And would you go at the money or out of the money?
I might do long call on IWM, short call or short call spread, vertical spread on QQQ. That gets a little more complex. And
Okay.
don't get me wrong, I'm not bearish on QQQ. That doesn't mean that they're going to go down. They might continue to do well.
It's just relative to QQQ. You
Yes.
feel that the small caps are going to go significantly higher.
Right. I think
Got it.
it will hold better if it goes down.
And you're hedging yourself by shorting QQQ. So
Pretty much. So it's
Yeah.
market neutral. It doesn't matter where the market is going. It's just one versus the other. And the hedge fund terms, when it's a very short-term trade, it's called statistical arbitrage. When it's more of a longer-term trade, like I'm discussing right now, that's called just long short. Just
Yep.
just the way it's that it
Got it. Interesting trade. It's when I was looking at that chart, I noticed that it looks like the small caps are going to break out and catch up to the larger companies. But I was looking at a energy trade right now, and I'll share my screen with you.
Uh-huh.
And it was quite interesting because like we have VOC right here. And VOC is an energy trust. And I was buying VOC probably in here the last 4 to 6 weeks when we talked about it, when we thought oil was making a bottom. And it looks like we had a significant rally of about $10 in crude.
Yeah.
And what's interesting to me is right here, you got a bunch of consolidation right here. I'm still in this trade VOC. And if this thing pops up, which I think it will, if it breaks to the upside, we're probably going to run to at least $10. So we got another dollar to the upside.
Oh, yeah.
And the reason I like this trade, again, because you and I are very bullish on energy. I like this. If I'm wrong, I can hold on to it because this thing pays a very healthy dividend of about 15%.
Nice.
Also, I also like selling the calls. It's optionable, something that I look at. So I'll sell calls against the position.
Against the position. Yeah. Right. Mhm.
Exactly. So I'll collect call probably, and I'll do that right around once we start approaching 10.
Yeah,
So-
that makes sense. Because 10 looks like a big resistance. And if it breaks above 10, it might run.
Yeah. So and I'll just sell half is what I'll do. We have oil breaking to the upside. So the month of August, we're looking for a pullback, hopefully in the broader equities markets, correct?
It's possible. I mean, it's sort of 50-50 right now because we got a little overbought. We have to digest what interest rates are doing. So
Mhm.
a lot will depend on what 10 years doing, the longer term rates. The bonds sold up pretty hard on Thursday.
And that's negative for stocks.
Yeah, it's a little negative. So if it's a 1 day thing and they're bottoming, then everything is fine. If they continue to sell off, we'll have a pullback, which is, I would view it as a healthy pullback unless something really bad happens. So I don't see anything dramatic on the downside. You look at the chart of QQQ, they're really close to the all-time highs. So they probably get there. S&P, well, quite a ways away. I'm not sure if they getting there right away or no, but technically it looks like this. As we talked about small caps, I think trying to break out. So this is a good thing. I think right now it's behaving like a healthy bull market. So whether we like it or not, is behaving well. Some industries do well this week, this month, other industries catch up the next month. There's some healthy rotations. I know we will probably run into some problems later, but at the moment, unless something bad happens with interest rates, things are okay. So
Yeah.
let's put it this way.
So look, talking about QQQ, it looks like we had a breakout in July, as we've been talking about. Really, this needs to hold. It's about around, we'll just call it 370.
Yeah.
So,
It
that's
might,
what-
I mean, it got
maybe
over,
down here. Maybe down here.
right. It
Maybe
got,
to 360.
got overbought. We had a QQQ rebalancing, so that
Mhm.
top 5, top 7 stocks don't represent too much. That's healthy. It's fine if they sold off a little bit, like I said, around 370. If they do, that's no problem. Even if they do a little bit more, I think the buyers will come in. And August, I expect the volatility to go down. I expect VIX to stay, in the 12, 15 range. Right now at 15, I think it will go lower. Now, well, every time there is a bad down day, of course, it'll jump. But that's what I'm seeing. So nothing dramatic. I hope in August, and probably be more technical trading than macroeconomics. So
One of the things I've been thinking about, and the one in your 2 cents on this, is the longer we get towards the end of the year, the more bullish I get going into 24. And the big reason, again, it's hard to project that far out. So we want the technicals to tell us. But my overriding theme is that is a huge election year in 24.
Yep.
So it's hard for me. We got to sell off now if we're ever going to sell off, is what I'm trying to say, because they need that. They need the market up if they want any chance of getting reelected, or and I'm not talking politics here. I mean, just people vote. Just the economy's stupid, right?
Yeah,
So
it is. Yeah,
that's how I see it. So the longer we either stay in a range or don't really sell off dramatically, the more bullish I get going into 24.
that's true. Election plays a huge role. It does, and it's not just one party or another. Yeah, people vote. Like
Right.
That's the economy. So how they feel about it. And the higher the stock market, the better they feel. It doesn't matter if they have money in the stock market. They hear the news. They pay attention. So it's a good indicator. I mean, it's an economic indicator after all. I think in order for us to go back to a bear market, either the economy just falters, I don't see it right now, or as I mentioned, there's some delinquencies, credit cards and all that. And if that causes another banking crisis, a severe one, then we'll go down to bear market. But that's probably the only thing. So, and I can adapt a skeptical view, or what if we're in stagflation like the 70s, that inflation is so persistent and it's going to go up again, and growth is not there at all, or combined with recession. It's a possibility.
I could see that.
It's possible. Even how probable it is. I mean, I don't want to speculate because the signs are not there yet. When we start seeing signs, then we'll see, okay, this is trouble. Also, technically, internals have improved quite a bit over the last months. That's a good sign. When it starts to, I have to see more signs for it to go down. And you're correct. If we don't, the usual September, October periods when we get in trouble, every other year, that can happen. But even if we sell off, let's say 5-10% in a normal correction,
I think it'll be bought.
Yeah, that's probably not that big of a deal until something horrible happening in the world. Then it's fine. Then what's gonna I mean, we get to a point where valuations are too high. Valuations are hardly ever a market timing tool.
Sure.
If we get too high, I mean, we always overvalue. It seems like.
Yeah.
Yeah, if we get too high, all right, we consolidate and correct. That's fine too. I mean, I'm not expecting the market to go straight up.
Right.
So far, I need to see, everybody needs to see more evidence of trouble, and I don't see it yet. So when I see it, I'll switch like this.
Yeah. Me too.
You
All
know?
right. Well, thank you, Dennis. I appreciate your thoughts. And then we'll do this again next week and we'll see how the trade's working out and see what the indicators are telling us moving forward.
Always a pleasure, Andy. Thank you so much.
You bet.